Hey there, it's Will again. I wanted to do another video. This time it's going to be on a few ETFs mostly. Um, there's some advantages to using ETFs. You won't have as much volatility, generally speaking, in the price compared to especially growth stocks. And the other thing is you don't have to worry about earnings and stuff. Like sometimes when earnings happens, even if it is a good earnings, the stock will go down a lot. Or vice versa. If earnings are bad, things will go up, or it just doesn't make sense a lot of times. And if another issue is if you have stop losses with like volatile or stocks that move up and down a lot more, you might find that you're getting triggered, you're getting stopped out quite a bit because you don't want to lose a lot of money. So you put a stop too close, and it's knocked out a lot. So there are negatives, obviously, with ETFs. Less volume in some cases. It's a mix of so many stocks that you won't get the gains that some of the individual stocks will get. But there's stocks like ARC-G. If you scroll back to March from the crash, they're up hundreds of percent. And like 3-4x, and a lot of times they can be held quite easily, above a 50 or a 21 EMA type of thing. Especially if you go to weekly charts, these things could be held without doing any work, doing much of anything. So anyways, if you've been watching my videos, hopefully you can check out some of the older ones if you haven't, but I have a general philosophy of how I trade. And you could be buying stocks you could be holding stocks or ETFs for days, weeks, months even. So it's not a day trade or anything in particular. So it just, as long as things are looking good and they're still in the uptrend and that, you could hold on to these things. I'm using TC2000 here. If some of you know that if you want to get a free trial or $25 off purchase, check out the link in the description below. That'll help out my channel. And I've got the gold plan and I've got real-time US data. So I see the real-time US data. I'm in Canada, so I don't see real-time Canada data. They don't have that. So that's why I buy mostly US stocks and ETFs. The other thing with the ETFs that are nice is you can pick a sector. It's not like buying the whole index like the NASDAQ or the S&P 500. You're targeting specific areas like genomics, industrial, innovation, airlines, semiconductors, cannabis. There's retail, there's online retail like iBuy. There's Asia or China, tech, internet. There's energy stocks. There's gambling, ARC finance or any type of finance, XLF, metals and mining, esports like video games and stuff. So you're able to target areas and not just pick one stock. Like in the case of genomics, there's so many good stocks like CRISPR, Edit, Intellia, Invitae, Selectus, so you could buy a whole bunch of those. Pacific Biosciences, you can buy a whole bunch of those or pick the best ones or the ones that look good in the charts. But that's an option for sure. So anyways, like I said earlier, you probably hopefully know by now kind of what my philosophy is, but if not, I look for ideally getting in on a break of a downtrend or a pullback. So I wanted to do this video right now because Jets and a couple others are in that situation. So obviously certain people with ETFs, they just buy and hold, and that works great over time, because things generally go up. But you have these big ups and downs, right? And so ideally what I want to do is ride this uptrend, sort of get out and avoid a lot of the pullbacks and just rotate the funds. So we have the situation where we have this pullback. You see the red volatility stops, and but then now we just popped up above. So we've broken this downtrend, or this pullback. It's not a huge downtrend, but, and then what we also look for other things. We're not just going to look at the one aspect. So the first break of a downtrend is a good entry point. It's a little bit risky in the sense that in certain ways you don't know if that break of that downtrend, because there's a certain momentum in the downtrend. So you don't know that downtrend is going to be, that uptrend, that break of the downtrend is going to be sustained, right? You haven't established an uptrend per se, but there are some signs that this particular situation is positive. So that is the fact that the MACD, or I use the price percent oscillator, it's crossing. That's a good sign. You can see it cross back here, and then we had a good uptrend there. We have this flat period, and then it starts to swing up. So that means that that's a good sign when you have a bit of a period of time. Like if you just have an instant reversal, it's not as strong, I guess you could say, as something that's had some time to flatten out and come back. And this isn't a huge amount of time, but the other thing we have is the 50-day moving average moving up. And so you can see here that it kind of supported at the 50, and now we're getting close. And then we have this green volatility stop, so that flips over. Now it could flip back again at the end of if it starts to go down during the day. So the first entry, as I said, is a little bit risky in that sense that, you know, because this dot is just newly established flipping. So it could, you know, it depends on what's going to happen the rest of the day. But this is all looking promising. And you can see the relative strength is moving up again as well. The other one that's related to this one is aerospace and defense. So we have this pullback similarly. This one has like Boeing, but it's also got space stuff in there, Maxar and space. And it looks like Kathy Wood from ARK is looking at setting up a space ETF as well. So that could be why things are booming. I didn't look into that, but that could be why things are in particularly, you know, going up here. But we have this break. We have a green V stop today, but we've had a couple of green V stops. You also see a support at the 50, which is nice. So that's a sign that, you know, that there is support there. MACD, PPO crossing, stochastics moving up, green volatility stop, break of this downtrend. So this is another one that looks really good. I've talked about this before if you want to check out other videos, but if you want to actually find ETFs or stocks that are crossing, you can do a scan of your watch list or the overall indices. For example, if I go here in TC2000 and pick ETFs, I get a list of all the ETFs. If I go click on this check mark and go scan, I've created conditions for a MACD or price percent oscillator crossover. So here I'm going to get the two. So as you can see, Jets shows up in defense, which is another, it's a 3X, but it's, you know, it's another, it's like the aerospace one that I showed. And if I go in here and I look at price percent oscillator, it says crossing up now. You can change that to like within the last 2 bars. So you don't have to be as exact in terms of just currently. And that's where you'll find some other funds. So you have ARK F crossing. It's been going up for a while, but there was a pullback here. So now we're seeing that cross up. ARK G is renewed its cross. ITB is the home. I don't like this one right now because there's been these bounces off of resistance. So I'd want to see like more, probably a break of this particular spot, this price, and a green volatility stop and more established, just because it's been doing that multiple times. So how do I do that condition? If you go to your one of your whatever indicator you're trying to figure out, like you want a cross of the price percent oscillator, you can click on this arrow that's next to the price percent oscillator and say create condition. And then instead of it being greater than 0, you're going to say crossing up the moving average. Okay? So this aqua color is the price percent oscillator, and the blue is the exponential moving average. So that's, you want the PPO to cross the moving average. So you can say now. And then if you want to save that, give it a name. I also add price and volume because I don't want like low prices like penny stocks or low volume stocks. And you can add whatever other indicators you want. I think that's all I'm going to say for now. I just wanted to point out JETS and ITA in particular. So as I have various ETFs, I also look for ones that are like coming around. Like I'm not going to buy utilities right now because they're below the 50, but you can see how it's bottomed out and it's kind of coming back. Utilities isn't the most, the greatest growth type of ETF, but I look for ones that are potentially like real estate. It's not doing great right now, but it's about to cross, but it is below this 50 moving average. So I look for things that could be coming around again. Let's see. There's other ones that they've done really well, but uranium had a bit of a pullback. So, there are ones that have re-entry opportunities, I guess you could say. All right, guys, we will talk to you later. Hope that helps. Don't forget to get the TC2000 link in the description below. See you guys.